Hello, everybody. Welcome to a very special episode. I had a conversation with Greg Foss last week, and I had a conversation with Lawrence last week, and they had two different stances on the BlackRock ETF. And I was like, okay, let's put them together so they could talk about it. And we're also very lucky to also have the head of Swan Private, Stephen Lupka, and Elliot Johnson. And Elliot Johnson is the founder of Evolve, and they, from my understanding, and please correct me if I'm wrong, Elliot, they are responsible for the first Canadian Bitcoin spot ETF. So I think it's a great combination of people to have this conversation about what are the ramifications of the BlackRock spot Bitcoin ETF. So let's jump straight into it, and let's bring the guests one up at a time. So first of all, Elliot, how you doing? Did I get it right? Did I get what I said right, or did I? Yeah.
Oh, great to see you. Yes and no. Let's put it this way. There was another issuer who was 24 hours faster than us because they had the regulator check their filing first, even though we were in at the same time. So we were building at the same time. Anyway, I like hearing that we're the first. We certainly were the first to file for an ETF in Canada connected to Bitcoin. Back in 2017, it was going to be related to the CBOE futures market back then, but we couldn't get regulatory approval. In that sense, we're the first. We were then 24 hours late after the other guys got theirs approved first, just for bureaucratic reasons. But
that's not fair. That's a technicality. That's a technicality. That's not fair.
Hey, absolutely. And that's something I've been discussing with folks in the US, because you guys have a race on your hands too in terms of SEC approvals. And maybe the SEC can look to some of the mistakes done up here in Canada to make it a fair market. So definitely relevant.
All right. And of course, the head of Swan Private. He's not in the sun today. Stephen Lupka, how you doing?
I'm doing great. Excited to be here. This is a great topic. I mean, a lot of exciting stuff coming, down the pike with these filings. I think it's going to be a great conversation.
Absolutely. And of course, the two legends of Bitcoin Twitter, the macro heavyweights, Lawrence Lepard and Greg Foss. How you guys doing?
Good. I'm not sure I'd call us that. Yeah, great. Thanks for having us on, Nico. Nice to see you again.
Happy to have you guys on. Okay, so I kind of want to address the elephant in the room, which is you guys had some disagreements in terms of what the consequences of the BlackRock Bitcoin ETF would do. Lawrence came from the angle, and I had a conversation with him and Caitlin Long from the angle of it could potentially lead to rehypothecation. And then Greg, you had a different take. So I wanted to get your guys' thoughts on that. So if Lawrence, you want to jump on it first?
Yeah. So look, we don't know for sure what they're going to do behind the scenes, but we do know this is BlackRock, and they live in a Wall Street world that lives off of rehypothecation, and they run a system where they can basically know that if they make a mistake, they're going to be bailed out by printed money. And of course, we all know the beauty of Bitcoin is it doesn't allow that. And so they may be stupid enough, and I believe they are stupid enough to potentially create paper Bitcoin with this product. The rehypothecation is a very high probability behind the scenes. And I actually dug into the prospectus and I tweeted it out. And they even had some language in there talking about the adjustment price, which was, they said the thing will not always track perfectly. The price of the ETF won't always track perfectly with the price of Bitcoin. And there will be an adjustment price as we make sure we match the size of the fund to the size of the Bitcoin we hold. And I thought, okay, that's it right there. There's the window. So they could sell paper Bitcoin is the way I read it. And they're likely to do so, based on how they've behaved in the past. Having said that, I think that they're coming into the space and announcing, this is a $10 trillion, one of the largest, if not the largest asset managers in the country, just removed an enormous amount of career risk for any financial advisor who couldn't put people into Bitcoin because it was scary and nobody big was endorsing it. And so now we've got Fidelity, these guys, a bunch of other people applying. This is going to be enormously positive for Bitcoin demand in your average person's portfolio. And that's a very good thing. But the risk of rehypothecation, I think it's very real.
Greg, I know you had a different take on that. What are your thoughts?
First of all, let's make sure that disagreement is always good, especially with a business partner, of which Larry is one of my business partners in the Bitcoin Opportunity Fund. And as I like to always say, if everybody's thinking alike, somebody isn't thinking. Okay. And that was a quote from your famous General George Patton. So I have a bit of a different take, and it's all in the art of dissecting the language. First of all, if I'm not mistaken, and my friend Elliot is the expert here, there's usually force majeure language in any ETF, like the BlackRock ETF, that allows for adjustments in the event of market dislocation or the like. My very simple layman's understanding of this is BlackRock will have a number of ETF shares outstanding, of which all of them are borrowable. Most of them, because the institutions that own those ETFs are going to allow them to be borrowed, which means you can borrow them to short them if you want to take a position on Bitcoin. That's fine. Shorting is a necessary component of any efficient market as far as I'm concerned. But my point was only that the maximum amount of Bitcoin that could be essentially recreated is the number of the market value of Bitcoin that's in the BlackRock ETF. If they're going to do nefarious activities, which include using derivatives or paper Bitcoin exposure from an exchange that doesn't actually deliver the Bitcoin, I believe that will risk BlackRock's entire reputation across their entire ETF business model, such that if I was making that decision as CEO of a ETF company, I wouldn't even think twice about it. I would not risk my entire reputation of proper pricing and closing prices on an ETF that is supposed to mimic some sort of benchmark or some sort of asset. I would not do it. Now, Larry and I have differing views as to the potential for them to do it. Of course, there's the potential. I do not argue with the potential. What I believe is in the ethics of Wall Street. Now, that in itself might be one of my sillier comments, but remember, this is a $10 trillion asset manager that's going to risk the entire business for how much is the Bitcoin ETF going to be by BlackRock? I said 50 billion. You're going to risk a $10 trillion business. Let's get this straight. A $10 trillion asset management business for a $50 billion ETF that could grow much bigger than that. But I think that is the combined inflows into the Bitcoin ETF. Why did I say that before, Nico? Because in Canada, it was 5 billion. The rule of 10, take what happened in Canada, multiply it by 10. That's what you get in the United States. That tends to work well with GDP, with things like mimicking financial risk exposures in different markets. So without talking too much more, Larry and I always agree on just about everything. It's just our degrees of probability that something happens. He might put a higher probability that they're going to do it. I would say force majeure is always an input into these Bitcoin or any ETF whatsoever. And Elliot will expand on that. And secondly, and most importantly, I don't risk the entire company business, which is built on ETFs, because I'm going to put paper Bitcoin in a minuscule ETF relative to the rest of my business. Just my 2 cents. Thanks, guys.
Gotcha. Okay, so before I push it on to Elliot, Stephen, do you have a take? And I'm sure you've had clients that have asked you about this as well.
Yeah, absolutely. So my biggest concern is actually not that they sell paper Bitcoin. It's actually that the ETF is too successful and they hold too much spot Bitcoin. My concern is that they actually hold the Bitcoin and they end up holding over time. I'm not putting a prediction on this, but I'm not even saying this will happen. But if they were to hold several million coins, there's a clause in the ETF filing about being able to decide a fork. So if there's a fork of the network, that BlackRock reserves the right to decide which fork is the real Bitcoin. So the scenario that keeps me up at night, and I'm going to reiterate, I'm not saying I expect this to happen, And I'm not even assigning a probability to this happening. But the scenario that really concerns me is not paper Bitcoin. It's 3 or 4 million coins end up in this ETF, which would be a staggering amount. And then there's some behind the scenes stuff. There's a fork. Maybe it's initiated by, institutional capital. Maybe it comes from somewhere else. BlackRock sides with the more centralized, more surveilled, less secure, more profitable to them fork. The trust is now backed by those coins. They market sell 3 to 4 million Bitcoin on the open market, tank the price of actual Bitcoin. And, most people don't understand the difference. That's the concern for me. Now, so the way I relate to it is I kind of fall somewhere in the middle. I think the ETF is bullish for price. I think it will cause the price to go up. I think there's no doubt about that. It's going to drive price up. It's bullish for Bitcoin. It'll not just inflows into the ETF, but other market participants, career risk diminishing, other people following suit, other companies launching products. But if it is too successful, we do run certain risks, and we should keep an eye on that. And I think the solution to that is actually providing, because who's really going to want this ETF is institutional capital, financial advisors, and other sorts of market participants who have mandates which restrict what they can invest in, how they can custody those assets, and various things like that. So the solution to not let this get too big is to have alternative products for them, which meet their mandates, but are not all concentrated in one product, fund, or company. And so I think that's a mission for the Bitcoin builders, for people that are working in the space, that are building products, to build out those options over the next few years. And I'm looking at the chat, and some people are saying, hey, I need good news today. Yikes. Let me be really clear. I'm not saying this happens. I'm not saying this happens anytime soon. The price is going to go up, most likely a lot, between now and even a scenario where that happens. This is more something that I share to say that we should be alert to, and that we should build the products now, so in 5 years this doesn't happen.
Gotcha. Okay, so I'm going to pass it on to Elliot. Elliot, after everything you've heard from Steven, you've heard, Larry's thoughts as well. What would your response be? What's your take, especially if someone who actually runs a Bitcoin spot ETF in Canada? Obviously, you have a unique vantage point and a unique perspective.
Look, maybe I could just start by saying, unsurprisingly, I'm not afraid of the BlackRock ETF, but I really respect the level of skepticism, the questioning that's coming from the Bitcoin community, because it's right and proper to make sure that all the questions are being asked. But you know what? We're in a unique position with Bitcoin because you can look directly at the blockchain, audit the blockchain to make sure that the supply is still what the supply expects to be. So I have different views on concentration risk, perhaps than some folks, in the sense that I don't think that a large player owning a lot of Bitcoin hinders the ability for the rest of the world that owns Bitcoin to benefit from it, because of the infinite divisibility nature of the asset, in the sense that, in theory, you could onboard everybody else in a single SAT if you divide it enough, and it's non-dilutive increase of capacity in terms of other people being able to use the asset. It doesn't matter who has the biggest amount. What matters is the Bitcoin doing something for you that you think is of value? And so, just to address that point first, adoption drives value in this asset class. It's the only thing that drives value, really. It's actually not the structural 21 million Bitcoin, because you can go and fork Bitcoin to something else that has 21 million, but if nobody adopts it, it doesn't make any difference. And that, I think, is the point that defends us against there being a fork that BlackRock then gets to control, because you don't want to kill the golden goose. There's really no point in owning a forked Bitcoin that loses its allure because it isn't being useful for anybody anymore. Unlike gold, which is still physically gold, even if people aren't using it for any form of commerce. And of course, the story of Bitcoin is the combination of a hard asset combined with the adoption curve. It's that Metcalfe's law input component that is the most exciting part, actually, because it's being combined with a digital bearer asset. So that's something that I think is worth a lot of thought, because it's the same reason that I don't think anybody should be concerned that Michael Saylor controls a lot of Bitcoin. It really doesn't matter. Also, if you show up to Bitcoin as a new person today, you might think, well, I wish I'd come in 2017. It doesn't matter. Bitcoin is as useful to newcomers as it is to folks who've been around for a long time. I really think that's fundamental to the asset itself. Now, as it relates to will BlackRock rehypothecate the Bitcoin they hold in their fund, I really think, first of all, they'd have to be out of their mind to do that, because it's a hard asset with auditability. And also bear in mind, BlackRock is not, as much as, you know, I'm sympathetic to the argument that there are things that are done a little bit behind the curtains in government or in Wall Street or whatever, but this is a far cry from, you know, the FTX situation, in the sense that BlackRock does exist under the laws of the United States. It is a regulated entity. Its fund is a regulated entity. It's going to be audited. Our product, for example, we run a fund. It's called the Bitcoin ETF. It trades under the ticker EBIT in Toronto. It's exactly the same structure that BlackRock has filed for. So if you want to know how their product would work, you can look at ours. You can come buy ours in Canada and see exactly how it works. We are regulated. We are audited every single year. E&Y, our auditor, checks to make sure that all of the blockchain transactions that have happened in the fund match up against the creations and redemptions of shares of the fund to the exact address on the blockchain where our assets are held in cold storage. This isn't the same as when you put your money into a deposit account at your bank, which means you don't have the money anymore. You have a claim against the money from your bank, and the bank just commingles it with the rest of their balance sheet. And good luck figuring out whether the bank has that cash or not, and the government can print more of it. This is a very linear relationship, and that level of detail isn't just possible, but it's required by our auditors, because they can look and they can check to make sure that every single transaction that happened in our fund fed through to an actual transaction on the blockchain for the account that is held in trust for the fund at the custodian. That's unique in the sense that Bitcoin ETFs allow that to happen, and that's not happened with other investment funds and ETFs in the past, and it's because of the asset class. So look, is there going to be rehypothecation of the shares of the Bitcoin ETF for the sake of general, you know, other activities within financial markets? Will you be able to borrow shares to short them if you want to take a bet against the price of Bitcoin? Absolutely, for sure. But will you be able to very easily mathematically know how much Bitcoin BlackRock is supposed to have by looking at the AUM and dividing it by the price of Bitcoin and saying, therefore, this is how many Bitcoin they need to have? You will, and their auditor will have a burden to check to make sure the Bitcoin is there. And so I think it's important to maintain this pressure of skepticism on BlackRock and on the financial system, but it's a new ballgame because we can check, and that makes it different than gold. And it also is not like other assets within the financial system, like equities and bonds and so forth, where you have clearinghouses and a variety of financial plumbing where people can get their fingers into it. Nobody can touch the Bitcoin in our fund except for us, and we can only touch it to meet the creation and redemption needs of the investors who are buying and selling our fund. And as a result of that, it is very much a different vehicle. And I think the plumbing matters. And I think, frankly, investors, you know, it's great that people are reading the prospectus and the filings and so on. And to Greg's point, by the way, Larry, I think, you know, I read some of the tweets you had about the language in the prospectus, and it's all language that I've seen many times with a variety of other products. The concern that BlackRock has, mathematically, you can just look at this. If you assume their $54 billion is the expected AUM of Bitcoin ETFs in the US within a month or so of launch, by comparing it to Canada and taking the same market share, that's about 40% of the current liquid supply of Bitcoin, based on the amount that's moved more recently than the past 12 months. So they're not going to be able to put $54 billion of Bitcoin into the fund at 30,000 bucks a coin. It's not going to happen. Like, the liquidity will occur, but liquidity will occur at a higher price. And so their concern is big inflow days, right? What happens on day one if they need 10 million bucks at their reference rate? There isn't 10 million bucks available probably at that reference rate at that day. And so their concern is the early friction if they launch and it's just the biggest ETF launch ever. And I'm not surprised council would put language like that into their prospectus.
Interesting. Because I'm going to pass it on back to.
Can I just say, Elliot, you mean 10 billion, not 10 million.
Oh, I'm sorry. I'm sorry. Yes.
Let's be clear.
Absolutely.
We got to get our orders of magnitudes correct here. Okay.
Yes.
10 million is doable. 10 billion.
No,
That's the exciting part.
I do 10 million every morning without any trouble.
There you go, brother.
10 billion. Yeah. I think you could easily do $1 billion or $2 billion without really blinking in the market at the current price. But it's when you start to really go after those liquid Bitcoin that you're going to start to see the price have to adjust to provide the liquidity at the price that they are going to need to buy.
But you're saying if someone wanted to buy it all at once, right? Because if you saw with the Michael Saylor strategy, which he kind of layered it in over a long period of time, and in the process of him doing so, it didn't really pump the price.
An ETF,
that's right.
I'm going to jump in front of you. Understand the difference between running a business that marks and closes on a reference price, and the difference is called slippage, and your whole reputation is at risk on your ability to track a reference asset price without what's called slippage, or in other words, you're not tracking that asset. You don't have a business if you can't do it properly. Hey, Foss just started a thing. It's called SPY, and my SPY, which tracks the S&P 500 index, not even close. This fucking thing is bullshit. But I'm going to risk my entire reputation on that? No, you are not. You have to put in bells and whistles in order for an event that will allow you to grow over time. This is a 4 p.m. mark type of decision, and slippage kills the business. Very simple. Over to you, Elliot.
Well, yeah, Greg, just to add to your point, MicroStrategy reports quarterly results many weeks in arrears from whatever it is that they do in their business. When BlackRock launches their ETF, everybody is going to be looking at that on screen all day and looking at the amount of volume traded. The world is going to know how much Bitcoin they're going to need to buy at their reference price the next day. It's not, this is a transparent thing. It really is. Like, this is completely different. They're not going to be able to go and accumulate it over a period of time quietly and then somehow move it into the ETF, because the ETF is just a straight up pass through. And so, you know, I look at the flows of my product and my competitors' products each and every day. I know what's coming in and what's going out. I can see, because of shares outstanding, how much was created or redeemed. I know exactly how much everybody needs to trade. And this is the thing about ETFs, is that they are a transparent vehicle that trades on the exchange that really is quite hard to hide from. And you're not going to be able to hide from $10 billion of traded volume. And then just, you know, I mean, unless BlackRock has their own supply they've been gathering for months now, and they can somehow, but even so, they have to cross it at their reference rate. So it doesn't matter if they're the seller. They might have $54 billion of Bitcoin today somewhere in their system, but they have to cross it at their reference price. And they're using the same reference rate we're using, which is a survey of the 6 biggest exchanges in the final hour of the day from 3 to 4 p.m. So they have to they need that Bitcoin at that price. And so it's a completely different ballgame. It's not like it's not like running a corporate where you can, you know, announce later what you did last quarter.
Gotcha. Okay, so I want to pass it back on to Lawrence. You know, after you heard what Elliot had to say, after you heard what Stephen had to say, and what Foss had to say, and would it be fair to say, Elliot, that doesn't gold have to, the gold ETFs, don't they have to adhere to the same type of regulation?
Yes, I believe so. There's a question, though, of auditing their vault and auditing how much gold there is in existence that I think makes it a completely different experience. But yes, I mean, look, absolutely. Like I guess the challenge is going to be, you know, what happens if you believe that BlackRock doesn't have the Bitcoin that you think that they say that they're supposed to have, right? If they don't have the gold that they say they're supposed to have, what are you going to do about it? I think with Bitcoin, what will happen is the price of Bitcoin will adjust to assume that they're going to have to go buy some more if they get redeemed. But
gotcha. All right,
yeah.
Larry, what's your take on all this?
Well, look, it all just goes to whether or not, you know, they're nefarious in their dealings. I mean, I think they probably have enough loopholes in the prospectus, and I recognize they're all standard, but and they have a way of doing business that allows them to, you know, create paper over and above, you know, what they say the reference price is, and you know, it's called rehypothecation, and if they do that, they'll be effectively creating paper Bitcoin. I mean, you know, they also have probably the ability, and it was the prospectus was 1,285 pages. You know, I bogged down. I couldn't read the whole damn thing, but I'm guessing some people have read it all, and I'm guessing that somewhere in there they've reserved for themselves the right to, you know, to buy paper Bitcoin or to buy contracts representing Bitcoin from sub parties. I mean, I know in the gold prospectus they definitely reserve that right. I'd be kind of surprised if they didn't reserve it here, but like I say, I haven't had time to go. I've got better things to do than read 1,285 pages. So, you know, even if they haven't reserved that right, my suspicion is that they could do it, you know, and claim that constructively they're trying to give people exposure to Bitcoin, and by buying paper Bitcoin, that solves the problem. So, you know, you have to remember that these people play by their own set of rules. They always have. You know, and they change the rules when it suits them. You know, I mean, look at the nickel short squeeze. Look at the change in the, you know, in the short selling rules in 2008. You know, these people think they're gods. You know, they're fiat gods, and they think the rules don't apply to them. So, you know, they'll probably get carried out if they do it. You know, I mean, Odell and Pish had a great WD What Bitcoin Did broadcast on this, which I listened to over the weekend, and they agree with me. I mean, they basically, you know, these guys, it's like the scorpion and the frog. I mean, they just can't help themselves. So we'll see. I mean, it's possible that they'll be honest and they won't fuck around with it. But, you know, I think that to assume that they won't is not the correct assumption. I think there's a better than 50% chance that they will. I mean, when Bitcoin did what it did, which is to say when it launched and went up 5x, you know, between 2018 and 2020, you know, the big run from 10 grand to 50 grand. I mean, alarm bells went off in every central bank and every monetary authority in the world. And they all said, holy shit, we're fucked. You know, we got to figure out how to get our arms around this thing. And you can bet that they've been devising ways to get their arms around the thing. You know, it's an existential threat for their system. So to believe that, you know, we know they've cheated in the past, to believe that it's an existential threat, and then to not, you know, think that there's a possibility they're going to play with it. It's just like, what? You know, of course they're going to try and play with it if they can. And that's how I see it. Guys, I got to jump off because I got a hard stop at 4:30, but
Gotcha.
I'll let you continue. I mean, we got a lot of other wisdom here. So,
Larry, appreciate you joining us.
Yeah. Okay. Thanks, guys. See you.
Thank you, Larry. Thank you, brother.
See you.
Good to chat with you.
All right, guys. Before we keep going, I want to give a shout out too, because I know Greg's going to be there. I know Steven's going to be there, and maybe Elliot joins us as well. I want to give a shout out to the Pacific Bitcoin Festival. Scan the QR code on your screen right now, and it will take you to the website, and you get 21% off. You could use the promo code REALBitcoin. Do it right now. It literally takes 2 seconds. Anyways, back to the conversation. Greg, I'm going to pass it on to you in response to what Larry said.
Anything's possible. I'll just go back to my belief that you have an auditable ledger that we've never had before. If we're worried about forking, how about I run a gold fund and then I fork it into a fund that holds tungsten bars painted gold, just because I think that, you know, that's what the new gold is going to be? The market will decide, Stephen. You, at the end of the day, you make an economic decision. And don't forget, there's BlackRocks of the world, and then there's nodes and there's miners, and you know, it's not a simple thing to fork Bitcoin, as we saw with the user adjusted soft fork UASF. I mean, it's a beautiful thing, Bitcoin, and we can worry about a lot of things, or we can look at it as a potential onboarding ramp where Bitcoin gets a QSIP. And I went through this and why I think it's positive that Bitcoin gets a QSIP and how that gets adopted into institutional portfolios that someday eventually become keys that you hold in cold storage. Okay. Bitcoin held in cold storage. I like it, but trust me, it's not easy to teach an old boomer like myself, multi-sig, or cold wallets, or you're playing with this thing, and if your fat thumb hits the wrong key, poof, it's gone. Like, I know it's not, but an old guy who doesn't work on iPhone as well as the young kids, these things worry me. So there's a process that allows for onboarding, that makes it more simple for the world, including institutional investors, to adopt it. And most importantly, it's an auditable ledger. That's what I keep going back to. There's one number that you got to worry about: 21 million physical Bitcoin. Very simple. And then finally, a shout out to my friend Elliot Johnson, who, I'm glad you brought that up, Nico, because I think Elliot provides tremendous amount of value on any podcast, or for that matter, at any conference that discusses these things. I know I'm not an expert in operations of ETFs of any kind, the creation redemption process of any kind, I'm not an expert of. And then particularly with respect to the creation redemption process for a physical spot Bitcoin ETF that relies on the world's most secure ledger. Man, oh man, I want someone else in that job. That's why we're lucky to have Elliot here. And I think you'd be lucky to have him at the Bitcoin conference in Pacific Bitcoin conference in LA as well, Santa Monica. But that's just my 2 cents. Okay. All I know is, if I'm the smartest guy in the room when it comes to anything, you guys better find another room. Okay. I try to surround myself with people like Larry Lepard and Steven and Elliot Johnson. I'm here to learn. I have a viewpoint. You guys could take my viewpoint and say, go pound sand, Foss. Your viewpoint ain't worth the gunpowder to blow it to heck. Okay, cool. I'm good with it. Just understand that nothing is 100% certain, unless one thing. There is one thing that I can go to the bank with 100% certainty. Fiat money will continue to debase on an accelerated basis because it's pure mathematics. Act accordingly and don't overthink stuff, okay? Act accordingly. The fastest horse at the race, it's called Bitcoin. You better own some. Don't overthink it. Thank you. Over to you guys.
Amen to that. Steven, you have a response?
Yeah. So I think a couple things, right? Like, we need to, when we're discussing this conversation of like forks and other conversations about the actions BlackRock may or may not take. I mean, it's important to remember the block size war. It's important to remember SegWit 2x. Like, the history of Bitcoin tells us that large players have attempted to influence the code. They have attempted to influence the development trajectory of Bitcoin. They have attempted to influence which fork, which version of Bitcoin is valid. And so there are different ways that perspective could be worded, right? Like, it doesn't have to be BlackRock reserves the right to define the fork, right? Like, if you're saying the market should decide, and I agree, the market should decide and did decide SegWit 2x, then the clause should be the fork coin with the highest trading price after 6 months, and they can just hold both. There's no rush. They don't need to sell them immediately. It doesn't matter one bit. They could say whichever one's trading at a higher price after 6 months, after a year, that's the one. That's the one that they could take it outside of their own hands. But instead, they have imbued themselves with the discretionary authority to decide which fork. And that's where we can't relax, right? Like, we've seen this play out before. We've seen Coinbase try to influence. We've seen Grayscale try to influence it. We've seen miners try to influence it. They didn't succeed. And so we were successful in the block size war. However, one of the things the ETF, why were we successful in the block size war? One must ask that question. One must ask, okay, so how did the owners of Bitcoin, the hodlers, how did they prevail against these large entrenched corporations that wanted to increase the block size, that wanted to do these things? And the answer is, like, The hodlers were very educated. They understood Bitcoin really well. They cared very strongly about which trajectory it took. And obviously they, were correct. All other forks of Bitcoin, which took this trajectory, are trading for a fraction of Bitcoin's price. But when you have an ETF and we come into this next epoch of growing adoption, of mass adoption, what changes? The average holder of Bitcoin is no longer in this era very educated on Bitcoin. They don't understand Bitcoin as well as the Bitcoiners who fought in the block size wars, right? Like that most likely will be the trajectory. You're going to have a lot of average people that just buy it in the ETF. They don't know much about it. And so that's not your intransigent minority. That's not your group of diehard hodlers that are willing to fight and sell the fork coin and approach it in this way. And so we need to be more on guard, not less on guard than we were then. And especially when you're dealing with an entity like BlackRock that is way bigger than Coinbase was during the block size war, right? They have so much, they have the ability to pull in so much more capital. So like these discussions earlier in the conversation, I'm kind of going back to some earlier comments of like, oh no, they're not going to pick a bad fork because it could financially jeopardize the ETF. Well, that's exactly what Coinbase tried to do. That's exactly what Grayscale tried to do. Nobody thinks they're picking the bad fork. Everyone thinks Bitcoin would be better. Imagine the government comes to Bitcoin. There's regulation in Congress where they say, this thing is just, it's too private. We can't surveil it enough. It's really worrisome. If this doesn't change, we're going to pass all this legislation, making it illegal for you, BlackRock, to run this ETF because it's not surveilled sufficiently. And so which decision is financial suicide there, right? Like if that's what BlackRock is facing, of surveil or die, then the rational decision is to try to support the fork, right? So this idea that like any scenario where you might possibly support a fork would be economic suicide, I think like doesn't fully encompass the wide range of incentives that like would be possible here. And so again, like I come back to my core argument, the way you avoid this is Bitcoiners build Bitcoin aligned custodial products for institutions. The institutions don't want to hold it on a Trezor. Maybe we can sell them on some sort of multi-sig. That's one road. But you need to build them. And Foss brings up another point with like a QSIP, like these ETFs fit into these institution systems. Bitcoiners need to build something that fits that. And they need to do it in a way which is consistent with the Bitcoin ethos. That is what will ensure that this thing doesn't balloon out of control. And we have time to do it. I'm not saying this happens quickly, but what will prevent this from happening is Bitcoiners continuing to build with these institutions in mind. And what Bitcoiners need to understand when thinking about these institutions is that they have different requirements than you and me. You and me can get a hardware wallet. You and me can do it this way. They need to do it a different way. And we need much more sophisticated, much more Bitcoin native ways to sell them, so we don't just hand the bag to BlackRock.
Yeah. Elliot, I'm sure you have what would your response be to Steven's take?
I agree a lot with that perspective. I've said since we launched our first Bitcoin ETF that there's going to be a day where nobody needs Bitcoin in an ETF because that's when we have adoption. That's when, and it's not just, obviously on chain, everybody doing self-custody is one view of a future adoption that people are striving for. But between now and then, the other thing that could get rid of Bitcoin ETFs as a necessary structure is just all the banking systems allowing you to hold Bitcoin within your bank account. That's as simple as that, because like it isn't that hard to integrate the asset into there. But, I would, kind of highlight a few things here. I mean, one of them is I'm very much in the camp of everything's good for Bitcoin, and I'm very much in the camp that Bitcoin is for everyone. And so if you really want to explore that, it's like free speech. It means there needs to be people you don't like who get to use it too. And that, it means if you're skeptical of Wall Street, you're skeptical of the banks, that's fine, but they also get to participate in Bitcoin. And I think there's a false equivalence people put towards having a lot of Bitcoin to having a lot of influence over Bitcoin. I don't think those things are the same. BlackRock's influence over Bitcoin is going to be a function of the marginal flow that they will receive into their product, not the total aggregate amount once they've built up their large fund. So they're going to have an incentive to make sure that they are supporting the fork that the community believes is the official Bitcoin, if there ever is a fork. And we recently had an experience with this, and I know I may get some nasty emails from some Bitcoin folks in your audience, but we do have an Ether ETF as well. And as a result of that product, we had the experience where they moved from proof of stake to proof of work, and there was a fork in the asset, and we had to decide which one to go with, because theoretically, the old proof of work version was the one we had built the product on top of, but the new one was the one that was being adopted by the community. And obviously, the one that was adopted by the community was the one that retained its value, and the other one withered away and was never really worth anything. But the manager does need a lot of discretion in terms of how to decide. I'm not sure I agree that they should be putting a recipe into a prospectus of how to decide. I think it is it's a judgment call each and every person has to make. Like, we have to make it as Bitcoiners as well, right? If there's a fork in Bitcoin, I have to sit down and look at my own hardware wallet and decide, do I want to keep both? Do I want to move one? What do I want to do? Everybody has to. That's the interesting thing about digital assets and the possibility of forks. But at the end of the day, I just keep coming back to the fact that the value is from the community. It's the growth in the network that's far more exciting, frankly, than BlackRock getting. I think BlackRock is going to do a lot for mind space in terms of adoption. I think, as Greg has mentioned many times, having that QSIP, having that vehicle that is custodied within the traditional financial industry opens the door to a ton of institutions. I've said before many times that the other thing about it is BlackRock signaling to the rest of the financial industry that it's okay. It means it opens it to institutions who either use their product or hold their own Bitcoin on their balance sheet or hold their own Bitcoin in custody for themselves. This is the starting point for so many people. And as crazy as it sounds, regulatory clarity is a thing for big institutions. I mean, for people who are, more on the libertarian side of digital finance, you look at it and you say, well, how come more rules increase freedom? Isn't that the opposite? And yes, I think there's an argument for that on an individual basis. But if you're a pension plan or you're a corporation or what have you, you need to make sure what you're doing fits within the rules of the system that you're in, the system that you've been in your entire career. And BlackRock's ETF is going to do that. And yes, I think it's obviously going to have an impact on demand because it's going to bring a whole bunch of new people into the ecosystem. But it's also going to make it way less weird for people if they know that their pension plan has some Bitcoin in it, and maybe they have a bit of a Bitcoin ETF position with their investments with their advisor. If they then come across the opportunity to self-custody a bit of Bitcoin so that they can take some with them on vacation and use Lightning to pay for things when they're overseas without having to change currency to something else. This is how adoption happens. It doesn't happen with people saying, I relinquish everything I've ever known and now I adopt the new thing all of a sudden. It happens when you can get to the point where Bitcoin is not an exotic thing for you. It's something normal. You feel like you know about it. That opens the door for you then to do a bit more in terms of using it. You have friends who have it. They do the same thing. This is all positive stuff. It really is. And so I think the main thing that I would just like to leave everybody with in terms of my opinion on this is that this is not a situation where there are two forces in opposition to each other. I don't think that's the right frame to think about it. I don't think it's the existing Bitcoin community and now BlackRock and the giants of Wall Street, and we're going to be in conflict. I really believe that that's not true. I think you can believe that that's not true and still believe there are bad actors in TradFi and there may be bad actors within regulators and others and so on. But I really think this is actually about people coming together. I really do think that that BlackRock is not going to want to be short any Bitcoin compared to what they say they have, because they're not going to want to have to chase that price if they need to go and meet a redemption by trying to buy it somewhere in the open market. There's a reason that Grayscale has so much actual Bitcoin in their fund. The scarce asset here that everybody wants is the Bitcoin itself. Like you don't want other things. You want the actual Bitcoin. I think everybody understands that right now, and I think that's why you see BlackRock interested in getting into the space. They don't want to be left behind. They don't want to launch an ETF when Bitcoin's at $300,000. They want to do it now at 30,000. It's better, easier to get in. They probably wish they'd done it at 3,000.
Yeah. So gentlemen, we are at the 45-minute mark. So Stephen, I want to get your thoughts and closing thoughts from Greg. And then Steve and I are going to go a little back and forth towards the end. So Stephen?
So you've said a couple things that BlackRock will need to support the fork from the community. And also that, like, basically Wall Street and Bitcoin aren't in opposition, Bitcoin community aren't in opposition. I agree with you on most of what else you said in terms of this is going to bring adoption. Adoption does look like these other things happening. It does bring in capital flows. Some people need different starting points. This will be bullish for Bitcoin. People want to own Bitcoin. I totally agree with you there. But on those comments of BlackRock will need to support the fork chosen by the community. Why?
My rationale for that is because the value of the fork comes from the size of the network. This is about Metcalfe's law.
No,
this is why Twitter Threads doesn't. This is why Facebook Threads does not really threaten Twitter. I mean, it does because they come with their own network, but it's why Nostr is harder to start. The network that attaches itself to the asset decides where the value is.
Yeah, that's not true, right? Like there is no price is not set in some sort of deterministic sense by the size of the network. There are very big networks that have little value. There are it's just that's not where price comes from. So there's no like deterministic rule where more people if BlackRock market sells $3 million of Bitcoin BTC on fork day, Bitcoin trades at a lower price than the fork.
I'm not actually debating price. I'm talking about value. And Greg often draws this distinction. And the value of the network that has the adoption is going to be the one that is going to be desirable. And maybe on fork day with a market sell because BlackRock picks the wrong fork, the price of the more valuable network drops, in which case, congratulations, everybody, Bitcoin's on sale. Good for all of us. But you can't stand in front of the crowd that is moving in a certain direction and fight against that. I really believe this is true. I think that it's going to be the value of the network that has the community is the one that wins as it relates to a digital asset with scarcity, because otherwise you have nothing. You have something of nobody's using it and you have no value. So I don't disagree with you about market price. I don't disagree with you. They can go and sit on the price if they dump everything, but I don't think it ends there. And that's why I think they're going to be ultra careful, because if this thing is $54 billion for them, they're not going to want to kill it by doing it wrong. So they have an incentive and they're aligned, and then they're part of the community. That's my overall argument.
Coinbase, I hear you. I don't mean to give you a time.
Can I jump in?
Coinbase had the same incentive, right? Coinbase, they started their company, right? They had Bitcoin. You buy Bitcoin there. And what you saw is, despite the fact they had that incentive, despite the fact that their business, they continually shit on Bitcoin, they continually moved away from it, they tried to harm it. And so it's not, because there are other incentives, and BlackRock has trillions of dollars of other incentives. They have this whole business, which may be much larger if pressure comes, right? There are a million other revenue streams that can place financial pressure on BlackRock. Like, their incentive isn't just like keep this one little ETF going. I mean, it could be a big ETF, but my problem isn't like, there is a probability that what you're saying is correct. There's maybe a large probability that BlackRock does not do anything to malign Bitcoin. They don't support any negative forks. I'm not even saying it's my base case that they do that, right? I'm not saying that, but the way I hear, and maybe it's not the way you intend it, but the way I hear your phrasing, you speak with a lot of certainty that they won't. And I think that certainty is dangerous for the community to accept broadly. I think we need to look at this as, this is a good thing. This is a good milestone. This represents the success of Bitcoin. This will drive up the price of Bitcoin, but we cannot get complacent here, and we can't trust them. It doesn't mean we have to assume they're out to get us, that they're going to try to, boogie trap us at every, opportunity, but we can't trust them. Like, we need to keep building, and we need to build products that make them obsolete.
And by the way, I'm not arguing against that. And I just want to make it super clear. I really think the skepticism of the community around this and the questions being asked, like, they're amazing. As an asset manager running a Bitcoin ETF, I'll take any question. I hope that BlackRock does too. And I've like nothing but respect for this conversation. So I'm with you. And it's a fair point. I am probably speaking with more certainty than I should, because we don't know the future. And I guess if BlackRock wants to try to destroy Bitcoin for the sake of some other incentive, they might have the ability to provide some harm. So points well made. I don't want you to think that I'm saying like this is absolutely the way it's got to be.
Sure.
And I certainly don't think any Bitcoiners should stop asking questions of BlackRock or Evolve or anybody else in the traditional financial community.
And let me apologize. Let me just apologize on the Metcalfe's Law outburst. I have been debating people on price models for the last 72 hours. It's a hot button. It's a sore spot. I apologize for my outburst there. That was not deserved for you.
Okay.
So, gentlemen, we are reaching the top of the hour. Greg, I want to give you an opportunity to say your thoughts.
So very quickly, this went from BlackRock rehypothecating Bitcoin somewhat into a pricing discussion of Bitcoin, which Stephen has spent a lot of his time, and I got my opinions out there too. Look, there is a difference between price and value. Markets are set that way. Stephen and I have traded our back and forth on that. Live by this rule. It won't get you in trouble. Set a target, but not a time, or give a direction over time, but don't give a price target. That'll keep you out of trouble, people. All right? Because you can't model price and time with any degree of certainty. That's a fool's errand. You can give a direction. There's an old saying, when the genius points at the moon, the fool looks at the finger. Don't be looking at the finger, people. Look at the moon. The genius is Bitcoin. I think we're overthinking this a lot. Adoption is key. I want to thank Elliot, my friend from Canada, for coming onto the hot seat. I support free open markets. A lot of the markets on Wall Street are manipulated and essentially closed. This is very important. Keep the good dialogue happening. I'm here for this. I will die on this hill. This is so important for adoption, for the children. I view this as an overall net positive, not 100% certain. Again, the only 100% certainty, fiat debasement. Prepare yourselves accordingly. Thanks for having me.
Thanks, Greg. I really appreciate it. Elliot, thank you so much for joining us on the stream today. I really appreciate you gentlemen coming. Thank you. Thank you so much.
Thanks, Nico. Thank you.
Thank you both. Thank you, Elliot. Thank you, Greg.
Steven, how you doing, man? I love that. I love where that conversation went. But before we continue the conversation, guys, scan the QR code on your screen right now. We'll take you directly to the pacificbitcoin.com website. You can use the promo code REALBitcoin, get 21% off your tickets. Steven will be there. I'll be there. Foss will be there as well. You definitely don't want to miss this celebration. I want to use the last 10 minutes or so to talk about Steven. Steven, you're part of Swan Private. So why don't you explain to everybody what Swan Private is and what you guys do over there?
Yeah. So I lead the private client team for Swan. That's our concierge private wealth division. So we work with larger buyers, high net worth individuals. We work with all sorts of clients who are looking to come into Bitcoin, but they want a little hand holding. They want there to be somebody on the other side of the phone that they can call anytime they have a question, anytime, whether it's about the ETF or something with their account or wire transfers or how to set up custody, right? So these are issues that we want to have real human beings, knowledgeable Bitcoiners, financial experts that are available to help people on their Bitcoin journey. I joined Swan about 3 years ago to lead this team, to grow this side of the company. And it's grown tremendously. We have thousands of private clients. We've helped people stack, huge numbers of Bitcoin. And what we learned is just, and the insight behind private is that none of these exchanges are doing this. You're not going to get on the phone with someone at Coinbase. You're not going to get on the phone with someone at Binance. And if you're allocating, a material amount of money for you and your portfolio, you deserve to have, the best service and the best information and the best people to hold your hand. If you're new to Bitcoin, if Bitcoin is something you want to get into, but you're not sure about all this, you're not sure about how to set up your wallet, you're not sure about how to do these various things. And that's what we do at Private, as well as events and research and products and all sorts of things.
Gotcha. And if people have any questions about that, could they reach out to you directly?
Yeah, absolutely. You can email me anytime, Steven@swanbitcoin.com. That's Steven with a V. You can also just go to Private, click on the Swan Bitcoin or landing page, just click Private, and you can talk to the team. You can hit a button to talk to the team. So,
and I think people could find you on Twitter as well, right?
Yeah, find me on Twitter. Just look up my name, Steven Lupka. I'm very responsive on Twitter. DM me anytime. So always happy to chat.
Awesome. Well, thank you so much for joining us today, Steven. Really, really appreciate it. Guys, that was the live stream special. If you enjoyed the show, you know what to do. Smash that like button and, consider subscribing if you feel like what we said and what we talked about provided you some value. But until then, guys, we'll see you on the next one. And take care, everybody. Peace out.